Hey everyone, and welcome back to the deep dive. Before we get started, make sure to hit that like button and subscribe to the channel. And don't forget to click the notification bell so you never miss an episode. Today we're diving into something that impacts all of us every single day.
Oh, yeah.
Money. We're talking about money.
That's right.
Specifically, money and monetary policy here in India.
Well, that's a big one.
Huge topic,
Very important, too.
especially if you're prepping for the UPSC exam.
Or really just for life in general.
For sure.
It's good to understand how this whole system works.
So let's start with the most basic question.
Okay?
What is money? I mean, we use it every single day.
Yeah.
But have you ever stopped to think about what it really is?
It's a great question.
What gives it value?
Yeah, it's actually more complicated than you might think.
I bet it is.
You know, if you think way back to the ancient world, people used to barter.
Oh yeah, like trading goods directly.
Exactly. Like, imagine you're trying to trade a cow
Okay.
for a cartload of wheat.
It doesn't seem very efficient.
It's messy.
Yeah. Right. So that's where money comes in.
Okay.
It was like this common denominator that simplifies everything.
So it's a medium of exchange.
Exactly. A universally accepted medium of exchange.
Wow.
Did you know in ancient India, people even use cowrie shells as money?
Cowrie shells. Really?
Yeah, it's fascinating how money has evolved.
I mean, we've gone from shells to coins.
To paper money.
Now we're even using like digital wallets.
Cryptocurrencies even.
You're crazy. But I guess even with all of these changes,
Yeah.
money still serves the same basic functions, right?
That's right. At its core, it's still all about facilitating trade.
So making it easier to exchange goods and services.
Exactly. But it's not just about buying things, though.
Okay, what else?
Money is also a way to measure value.
Okay, so it's how we compare the worth of different things.
Exactly. Like how much is a phone worth compared to a bill?
Well, house compared to a car.
Yeah, exactly.
Yeah,
It gives us a common unit of measurement.
that makes sense.
And money also acts as a store of value.
Okay, so the money I have now, I can save it. Right, and theoretically, it will hold its purchasing power over time.
At least that's the idea.
Ideally, right? Inflation and all that, but that's a topic for another time.
Yeah, we'll get to that. So
Mhm.
the money in my wallet, it's not just paper and metal.
Right,
It represents a certain amount of stored value
exactly.
that I can use later.
That's the idea.
Okay, that makes sense. But how does this value get assigned in the first place?
Especially now that we're not using like the gold standard anymore.
Right, like our currency isn't backed by gold or anything like that.
That's where fiat currency comes in.
Fiat currency.
Yeah, it's money that's not backed by a physical commodity,
Oh, interesting.
but by the government's decree.
So basically the government says this is money,
Exactly. They declare it legal tender.
and we all agree to use it.
Right, because we trust that everyone else will accept it too.
Okay, so it's all based on trust?
In a way, yeah.
And the Reserve Bank of India, they manage this whole system, right?
They do the RBI. They're like the guardians of our money supply.
So they control how much money is circulating in the economy.
Exactly. They have a lot of power in that sense.
So do they just print money whenever they feel like it?
Well, it's a little more nuanced than that,
Okay.
but you're on the right track.
So there's some kind of system in place.
There is. It's called monetary policy.
But monetary policy.
Yeah, it's basically a set of tools that the RBI uses to control the money supply.
And they use this to influence the economy.
Exactly. One of their main goals is to keep inflation under control.
Okay, so inflation, that's when prices keep going up.
Right, and your money buys less and less over time.
Yeah, that's not good.
Not good at all. So the RBI tries to keep it in check.
Makes sense.
Yeah.
So how do they actually do that?
Well, they have a few different tools in their arsenal.
Like what?
One of the most important is adjusting interest rates.
Okay, I've heard of that.
They can also control how much money banks need to hold in reserve.
Interesting. And this impacts how much money banks can lend out.
Exactly, and that affects everything.
Huh.
Oh yeah, from borrowing costs for businesses to how much consumers spend.
Wow, so the RBI is kind of like a financial conductor.
That's a great analogy.
They're orchestrating this whole flow of money in the economy.
Exactly, trying to keep everything in harmony.
It sounds like a delicate balancing act.
It is. They need to encourage economic growth.
But also keep inflation under control.
Right. Too much growth without controlling inflation can lead to problems.
Yeah, and being too cautious can stifle the economy.
Exactly. It's a complex challenge, especially in a country as diverse and dynamic as India.
This is already making me think about money in a whole new way.
That's what we like to hear.
But before we wrap up this part,
Yeah.
I have to ask about something that happened a few years ago.
What's that?
Demonetization.
Ah, yes, a big one.
It was a huge.
Definitely had a major impact on the Indian economy.
I remember those long lines at the ATMs.
Everyone trying to exchange their old notes.
Yeah, it was chaotic.
Yeah.
So what exactly was the RBI's role in all of that?
Well, that's a great question.
And one that we'll dive into in the next part of our deep dive.
Stay tuned.
Welcome back, everyone, to our deep dive into money and monetary policy here in India. Last time we talked about the evolution of money.
Yeah, from cowrie shells to digital wallets, it's been quite a journey.
For sure. And we also touched on the crucial role of the Reserve Bank of India, the RBI.
The guardians of our money supply.
Exactly. But now I want to dig deeper into how they actually manage this money supply. It's like they have this secret toolkit.
They do. It's called monetary policy.
Okay, so what's in this toolkit? What kind of tools are we talking about?
Well, one of their key weapons is the repo rate.
The repo rate.
It's basically the interest rate at which commercial banks can borrow money from the RBI.
Okay, so if the RBI wants to boost economic activity, they would lower the repo rate.
Exactly. Make it cheaper for banks to borrow.
And then those lower borrowing costs, they would trickle down to businesses and consumers.
Right. Businesses would be more likely to invest and expand.
And people would be more likely to take out loans for things like homes or cars.
Exactly. It can really stimulate the economy.
But I'm guessing there's a catch.
There is. The RBI also has to be careful not to let things overheat.
What do you mean?
Well, if the economy grows too quickly, inflation can become a problem.
Oh, right. Because if everyone has more money to spend,
Prices go up.
yeah, and then our money buys less.
Exactly. It erodes the purchasing power of our money.
So it's a delicate balance.
It really is. The RBI needs to find that sweet spot.
So when inflation is rising too fast,
They might raise the repo rate.
to make borrowing more expensive.
Exactly. Kind of like tapping the brakes on the economy.
So the repo rate, it's like a thermostat for the economy.
That's a great analogy. The RBI is constantly adjusting it to maintain a stable temperature.
I like that. So we've got the repo rate.
Uh-huh.
What else is in this monetary policy toolkit?
Well, there are a couple of other tools that work alongside the repo rate.
Okay, like what?
The CRR and the SLR.
CRR and SLR. Those sound like alphabet soup.
I know, they stand for cash reserve ratio and statutory liquidity ratio.
Okay, but what do they actually mean?
Essentially, they're reserve requirements for banks.
Okay, so how much money they need to keep on hand.
Exactly. The CRR, for example, dictates how much cash banks need to hold with the RBI.
So let's say the CRR is 4%.
That means for every 100 rupees deposited in a bank?
They need to keep 4 rupees with the RBI.
Exactly. They can't lend that out. It's like a safety net.
So it ensures that banks always have enough liquidity.
Right, to meet customer withdrawals and prevent bank runs.
And the RBI can adjust this CRR to influence how much money banks can actually lend out.
Exactly. It's another way to fine-tune the money supply.
Fascinating.
Right.
Okay, so that's CRR. What about SLR?
The statutory liquidity ratio is a bit different.
How so?
Well, it requires banks to hold a certain percentage of their deposits,
Okay.
but not in cash this time, in government securities.
The government securities.
Like bonds and treasury bills.
So it's kind of like an investment requirement for banks.
Yeah. You could say that it helps to ensure the solvency of banks.
And it also supports government borrowing.
Right. The government needs money to fund its operations.
And banks are essentially helping to finance those operations by buying government securities.
Exactly. It's a win-win in a way.
Okay, so we've got the repo rate, the CRR, and the SLR.
3 powerful tools in the RBI's arsenal.
But you mentioned another one earlier, I think.
I did open market operations, or FOMO for short.
Okay, FOMO. How does that work?
Well, it's a bit more hands-on than the other tools.
Hands-on, how so?
The RBI actually goes into the market and buys or sells government securities.
Oh, interesting. So they're actively participating in the bond market.
Exactly. When the RBI buys government securities from banks.
They're injecting money into the system.
Right, increasing the money supply.
And this can lead to lower interest rates.
Exactly, because there's more money available to lend.
And when they sell government securities,
They're pulling money out of the system.
tightening the money supply.
Right, and that can lead to higher interest rates.
So it's like a giant lever that the RBI is using.
To fine-tune the money supply and manage inflation.
It's amazing how all these tools work together.
It's a complex system, but it's designed to keep the economy stable.
And of course, the RBI doesn't operate in a vacuum.
No, they have to consider global economic conditions, government policies, all sorts of factors.
So they're constantly changing puzzle.
You could say that.
Speaking of economic puzzles, we have to talk about demonetization.
Ah, yes. A very unique piece of that puzzle.
You mentioned it briefly in the last part,
I did.
and I'm really curious to hear more about its impact and the RBI's role. in all of that.
Well, it was a bold move, that's for sure.
In November 2016, the government announced the withdrawal of 500 and 1,000 rupee notes.
Which accounted for the majority of the currency in circulation.
I remember those long lines at banks, everyone trying to exchange their old notes.
It was a chaotic time for many.
But the government claimed it was necessary.
To combat black money, counterfeiting, terrorism financing.
Those were some serious allegations.
They were the stated goals of demonetization.
And did it work?
That's a question that economists are still debating. There's no easy answer. Some argue that it did curb black money.
To some extent.
But others say the impact was temporary, and the costs outweighed the benefits.
Costs like what?
Well, a sudden withdrawal of cash caused major disruptions.
Especially in the informal sector.
Where cash transactions were dominant,
So many small businesses and daily wage earners.
they faced real hardships.
So while demonetization might have had some positive impacts,
It also had some unintended consequences.
and those consequences were felt most acutely by the most vulnerable.
It's a reminder that economic policies have real-world impacts on people's lives.
Absolutely. So we've gone from the repo rate to demonetization.
We've covered a lot of ground.
And in the next part,
Yes.
we're going to jump into the future,
We are.
the world of digital payments and cryptocurrencies.
Stay tuned.
Welcome back, everyone, to the final part of our deep dive on money and monetary policy in India. We've covered a lot of ground.
We have from the basics of what money is to the complexities of the RBI's toolkit.
And of course, we couldn't forget about demonetization.
A bold move with lasting consequences.
For sure. But now it's time to shift gears and look towards the future.
The future of money in India.
A future that seems to be increasingly digital.
It's the age of digital payments and cryptocurrencies.
So is India truly going digital? I mean, it seems like everyone's using their phones to pay for everything these days.
It's happening, and it's happening fast. India is in the midst of a digital payments revolution.
So it's more than just convenience.
Much more. It's about financial inclusion.
Financial inclusion.
Think about it. Millions of Indians, especially in rural areas, didn't have access to traditional banking services.
Right, they were excluded from the formal financial system.
Exactly. But digital payments have changed that.
How?
So they've opened up a whole new world for people who were previously unbanked.
So now they can participate in the economy.
Send and receive money, even build credit histories.
It's amazing how technology can bridge that gap.
It's truly transformative.
But can you break down some of the key players in this digital payments space? I've heard of UPI, BAM, Bharat QR, but I'm not really sure how they all work.
Let's start with UPI, Unified Payments Interface.
Okay, UPI.
It's basically the backbone of India's digital payments system.
The backbone.
Yeah, it's what makes everything else possible.
Okay, so what does it do?
Imagine being able to transfer money between any two bank accounts,
Okay,
instantly using just your smartphone.
that's UPI.
That's UPI.
Wow, no more waiting for bank transfers to clear.
Exactly, it's a game changer.
It really is. And what about BIM?
BAJIME, Bharat Interface for money.
Okay,
It's a mobile app built on top of UPI.
so it makes things even easier.
Even simpler, you don't even need to remember account numbers or IFSC codes.
Really?
Just link your mobile number to your bank account and you're good to go.
That's incredible. And hard QR, what about those QR codes I see everywhere?
Hard QR is another way to make payments using your smartphone.
So I just scan the code with my camera?
Exactly, no need for cards or cash.
It's pretty amazing how technology has simplified things.
It really has made transactions so much more seamless.
But beyond these platforms, are there other digital payment methods gaining traction in India?
Oh yeah, definitely. We've got AEPS Aadhaar-enabled payment system.
AEPS, what's that?
It uses biometric authentication through your Aadhaar number.
So it's like using your fingerprint to make a payment.
Exactly. It's very secure and accessible, even in remote areas.
That's cool. Anything else?
Well, we also have EMV chip cards.
I've heard of those. Are they like the new credit cards?
They're much more secure than the old magnetic stripe cards.
Because of the chip?
The chip makes them harder to counterfeit and protects against fraud.
So India is really embracing a whole range of digital payment options.
We are catering to different needs and demographics.
But what role has the government played in this whole digital transformation?
The government has been a major driving force.
Really?
Oh, yeah. Initiatives like the Digital India program.
I've heard of that.
It's all about expanding internet connectivity and promoting digital literacy.
So laying the foundation for this digital payments revolution.
Exactly. Without that foundation, it wouldn't be possible.
And of course, we can't forget about demonetization.
Ah, yes, that was a catalyst for sure.
It might have been controversial,
It was.
but it definitely pushed people towards digital alternatives.
When cash was scarce, people had to find other ways to pay.
And they realized how convenient digital payments could be.
It was an unintended consequence, but a significant one nonetheless.
So it seems like India is well on its way to becoming a less cash society.
The trend is clear.
But are there any challenges on this path?
There are always challenges. One of the biggest is digital literacy,
Not everyone is comfortable using technology.
especially older generations or those in remote areas.
So bridging that digital divide is crucial.
It is, we need to make sure that everyone can benefit from these advancements.
And what about security?
Ah, yes, that's a big one.
With more and more transactions happening online, cybersecurity becomes even more important.
Absolutely. We need robust systems to protect against fraud and data breaches.
It's a constant battle.
It is, but it's one that we need to win to maintain trust in the system.
Speaking of new technologies and challenges, we have to talk about cryptocurrencies.
Ah, yes, the elephant in the room.
They've been making headlines globally, but what's their status here in India?
It's a bit of a gray area right now.
What do you mean?
Well, there's a lot of interest in crypto,
Yeah, I've heard about Bitcoin and all that.
but the regulatory landscape is still uncertain.
So the government isn't sure how to handle it.
They're working on it, trying to find the right balance.
Between fostering innovation and mitigating risks,
Exactly. It's a delicate balancing act.
just like managing monetary policy itself.
Exactly. You're getting it.
This whole deep dive has been an incredible journey.
It has. We've covered a lot of ground.
We started with the basic question of what is money?
And we ended up exploring everything from cowrie shells to digital wallets and cryptocurrencies.
It's amazing how much there is to learn about this seemingly simple thing we call money.
Money is the lifeblood of our economy.
And understanding how it works is essential for all of us,
Whether you're preparing for the UPSC exam,
or just trying to make sense of the world around you.
financial literacy is power.
Couldn't agree more. Well, that's it for our deep dive into money and monetary policy in India.
I hope you all learned something new.
I know I did. Thanks for joining us on the deep dive.
And as always, keep those minds curious.
Don't forget to hit that like button and subscribe to the channel for more deep dives into fascinating topics. And make sure to click the notification bell so you never miss an episode. We'll see you next time.